Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. And for those of you in the chat room, Eric is in. I don't see the professor all that often. You know, it's tough when you're a teacher. You got to deal with the kids. That's good to see him here. He hasn't been in here for a while, and you know, Eric has been in our community for a long time, and you know, special friend of the ForexAnalytix family. I'll just call him that, and love having him in there. So let me grab a drink of my coffee really quick, and then we're gonna get into drilling through these markets. I'm actually gonna if you guys saw me you guys saw me tweet something here. Let me pull this up really quick. If you saw me tweet this really fast, here's from last night. That's me. This Pepperstone live trading event. This is going to be with Chris Weston next week, but just remember, this is this actually it's a live event. You know what it's going to be mostly? I'll tell you what it's going to be mostly. It's going to be mostly like what we cover here. I'm going to basically show the people the process of going through a bias chart and the reasons why I do it. And I think that, and if you can attend, that's great. It will be during the Australian hours. I mean, I know a lot of you guys in Europe are going to be fast asleep, so don't, you know, just, I want you to understand you're not really missing anything. I would still register for it because they might actually send you a link or, you know, the recording. But the reason why I say that is because, you know, every day we go through the bias chart and you kind of see my process in going through the markets, right? The nice thing about having John says it's fine with me. I'm an Aussie. That's awesome. Then it's gonna be perfect for you, John. The nice thing about doing it for somebody that hasn't seen me do it is that you get questions that you don't really think about. You know what I mean? And that's the nice thing is when, you know, when I do this every day, a lot of times it becomes second nature. If you watch me do this every day, it becomes second nature. And then you're like, oh yeah. But there are questions that go unanswered, I'm sure, that you're like, ah, man, I never even think to ask that. Oh yeah, I've always wondered that. And you know, why didn't I think about asking that question? So the nice thing is he'll give us a fresh perspective on like my process. And you know, maybe question it to a certain extent. So but that's what because I told him, I'm like, you can't force me into trading, because he's like, well, we're gonna do a live trading event. And I'm like, yeah, that's great and all, but like, you can't force me into the market. And he's like, well, can't you just buy or sell something? Like, if there was a gun to your head, you would do this. I'm like, no. Like, why would I teach people to do that? like, hey, you know, you have to be trading right now, so just do it. You know, no, I'll tell you, if the market gets here, I'm going to be a buyer, and the market gets here, I'm going to be a seller. And then he's like, okay, that makes more sense. I'm like, yeah, I'm not gonna do that. I mean, you could get some other monkey to trade for you, but I'm not doing that. And he completely understood. But I mean, the point is I'm not gonna sit here and just buy or sell something because I'm in front of the computer. When I did the trading battle with you know, against Chris Pulliver, and I'm doing another one of those, by the way. You can do it because you are you're dealing with a news event. So, you know, I'm like, unless you want to do this at, you know, during these hours. And he's like, man, it's a little late for me. And I'm like, then, you know, for me to force a trade in a time of day that I'm not usually trading, that I'm just looking for setups, I'm just going to teach you my process, or teach your trades my process. But he thinks that's really good because, you know, his most Australians, minus John here, most Australians really don't know what my process is. So it's I think it's good for them to be able to see it too. So anyway, I wanted to share that with you because if you were wondering what this was, that's what it's about. But register anyway. I mean, I think it's worth registering if you can, because if they send you a recording or you can listen to it after the fact, like I said, he may pull or extract some information from me that I wasn't really thinking about. So, all right, let's go through the markets and talk about this. The euro continues to break lower, and that was my warning yesterday with the chart of the day. If you saw my chart of the day yesterday, I was really saying, hey, I know everybody. Look, the euro was stopping at the 618 yesterday. The cable was stopping at the 618 yesterday. Gold was stopping at the 618 yesterday. Silver was stopping at the 618 yesterday, blah, 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 blah. And I'm like, man, I don't know if that's going to stop it. And that was the point of this chart yesterday. That was this chart yesterday saying the fall of the euro dollar has been breathtaking last couple of shows, blah, 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 blah. If you think the euro dollar slide may be over and are trying to pick up at this key level, the confluence of the 161% extension, the 78 retracement may be the magnet. And that was, that's this level, right? Right here. This is where the magnet is. And, I'm worried that a lot of people just try, this is natural to try to fade this move. It's natural. You see it. So because we're so used to trading ranges, but hopefully you guys have just stayed out of the way. I mean, that's been really crucial, right? Is just kind of, look, if you're not going to participate, just get out of the way. We've been in ranges for so long. It's natural to be like, oh, look, a 50 pip move. I'm going to go ahead and fade it because it's going to revert back to the mean. But this week we had a reason to be a seller or a buyer of dollars, right? So now the euro, next real support of the euro dollar is going to be right here, 118. Yesterday, I mean, and argue, in our defense, I guess in our defense or in defense of this 618 retracement, the thing is we did stall here. I mean, we wrote it yesterday or put it in our bias chart as support yesterday at 119, and we hit 119 and we consolidated here, but that was good enough for day trading to be able to take profits. Now next support is going to be 118.15, so let's write that down. And I think anybody who is a seller of the euro, I'm sure is looking to take advantage of this. So, and would love to see a move back above 119, maybe 119.10, right? And then obviously 120. And I think while we're below 120, you got to be bearish. Cable. Similar situation. Now, remember, a couple weeks ago, I was like, man, if you're long sterling, it's really trading weak. You got a big double top brewing here. And I don't know if you can really be a buyer. I mean, yeah, you're going to get bounce areas, but I don't think you're going to see some real buying until you get down to the 137 level. So support today is going to be 138, but I think while you're below this, because you can see that this is previous channel resistance, right? Or channel support, excuse me, held there. So that trend line is it will come back into play. And when it comes back into play, this is the place you want to be a seller right here, right? So 139.75, if you can get it. $138 is support. because this is 78% retracement. Aussie. I mean, this is, this is stopped the crap out of everybody. I mean, how many people tried to buy that 200-day moving average yesterday? That again, this is the same point with the euro dollar, and everything else. It's like, okay, I see everything on support. So how many people said we're going to bounce here? Of course we're going to bounce here. How, like we just dropped 200 pips. Like how are we going to drop further than that? I know that's what everybody's thinking, but the problem is when you come out of a consolidation like this, it's such pent up energy that of course you're going to get a breakout. So, I mean, the breakout here, minimum requirement at the moment, going to look something like, crap, do it again, not again. Okay. Not again. I'm joking. Okay. So, look at where this coincides. So what? Like how many people are like, oh my God, they, just think about this. How many people bought it last night and is like, oh my God, if I can just get back up to like 75, 70, I am so out, right? Like they bought it last night here at 75.50 because it was the 200-day moving average, and they're sitting in it right now. It's at 75 cents, and they're like, "Oh my God, if it just gets back to 75.70, I am so getting out of this, and I'm just going to count my lucky stars." Right? How many people are in that boat right now? They're down 50 pips, going, if I end up making money, think about how many times you've had that conversation with yourself. You're negative, right? Like, and you're in a trade. Let's just use this example. You're in a trade, you're down 50 pips, and you're like, how many times in your trading career have you been down like 50 pips and you finally get back to break even? You're like, thank my lucky stars. And you actually made money. You end up making like 5 pips after risking 50. And you're like, oh my God, I cannot believe I got out of that unscathed. Have you guys done that before? I mean, I have. I mean, if you haven't, you will. Right. Think about all the people that bought it at the 50-day moving average. We were sitting here at support at 75.50 last night, hadn't made those lows. And you're like, man, they might just probe just below that low, but I'm willing to risk like 70 pips to make it back up to, 77 cents. I'm willing to take that trade. And now you're down 50 pips and you're like, okay, change of plans. If we even get back to break even, I'm so happy. Or if I can make 5 pips, I'm so happy. That's exactly what's going through the mind of every trader right now that's, long the Aussie, that bought it yesterday at the 200-day moving average. Because you guys know, that's all I try to do is I try to put myself in the shoes of somebody who is trading the opposite. Not necessarily the opposite, but if I'm looking to sell it, like I'm thinking, how are buyers feeling right now? Like, I don't have an Aussie. Matter of fact, you know what? Let me adjust that price. I have a order of 75.80 and I'm going to adjust that to 75.65 because I mean, if I'm looking to sell it, I'm trying to think of all the buyers that bought it last night. Gorkum, Euro New Zealand's a nice breakout. Yeah, I think so. It is. All right. Anyway, continuing on. Oh, shoot. Next support. 74.35. I mean, if we continue. Kiwi, what happens if you break through this support? 69.40. Then we go to the 618, which is 68.80. So I'm going to write 6880, 6940 is bearish. And, think about all the people that like me I'm missing the short Kiwi. I mean, I'm long Euro New Zealand. Okay. But it's like I'm not short Kiwi right now. I should have shorted the New Zealand yen. That was my chart of the day 2 days ago. It's like, you know, I knew I should have shorted, but I already was long the Euro New Zealand. But anyway, like, how many people have been wanting to try to short this thing and you're just not getting any opportunity? So now, like, if you get a move back up to here, basically 70 cents, I think anybody would love to sell the Kiwi at a 70 handle. Dollar CAD. I mean, this is a hell of a move, man. I did not expect us to go this far this quickly. You know, my Canadian yen's looking great, but man, I took my dollar Canadian off. I mean, almost 100 pips ago. I mean, what the hell, you know? So what we got to do here is, I mean, it's got to be, I would think you get some sort of, you know, consolidation soon, because there's a 618. It comes in at 24. So this is 24.15. It's 13, but I'm going to write down 24.13 in case we probe above it. 124.15. It's bullish near term. And any dip now back to 123. Well, basically, if you get any dip down to 123, you got to be a buyer. So be right here, right there, right? Swissy is another one. Like, oh my God, I thought that 50% retracement was going to hold. Well, 618 comes in at 92.65, dips back down to, I mean, I would think here, because you can see, you know, a lot of the hourly wicks that are around that level. So I think people would be pretty excited if we got back to 91.60. Anybody who's shorting this is probably thinking, oh man, if we just get back to 91.60, it'd be great. 92.60, 92.70. I mean, near term, dollar NOK. This is a squeezer. I sold this yesterday at like here. I was thinking that the 78% retracement was going to hold. 870. We break through 870. You know I've been warning about the squeeze. It just is, obviously it took its sweet ass time to squeeze. But now, I mean, think if you're short this thing. You know, as soon as we got above 842, it was gone. I mean, it's been gone. Like, I mean, that's a 3% move in a day and a half. For a currency, that's ridiculous, right? Dollar peso starting to squeeze here. We get past this 50%. It's going to take off. So support is 2032. Oh, shoot. Did I not write that down? Oh, I'm put this on the cut. Put it in the wrong spot. I'm sorry. Dollar max 2062. Let's go to the dollar yen. I don't know what to do with the dollar yen. I mean, I think you just got to respect this channel. So resistance is 111. Let me get rid of this really fast. I don't even want to deal with that. 109.65. Oh, dude. That didn't. Hold on. Sorry. I don't like how that's coming out. 57, 870. Asterisk. 2062. Dollar yen 111. 109.65. I think 109. Let me just confirm that. Yeah, that's channel support. Okay. Dollar index. I mean, look at this thing just screaming. I mean, I just picked up some dollar Mexican peso earlier. I did it just, kind of scalping around. It wasn't even a huge position. I'm going to sell it. I picked it up at 2045 earlier. I didn't even mention it in the chat room. I'm going to exit it up here as we approach this 2060, just because it's like I got to take some profits ahead of the. I mean, literally, I was like, yeah, I'll just buy some. I literally bought this, not even a big position, just kind of like scalping around. I bought it like right here, and then it just screamed higher. It's like, okay, I'm just going to take it off. I actually want to reestablish a much bigger position. I've got my majority of my bids right now are 2045 and 2032. I'm looking at it right now. 2045, I have a bid on the dollar Mexican peso. I have a dollar Mexican peso bid, bigger bid at 2032. So I was just kind of waiting for a dip to come down here, right? I was like, and I'm like, with stocks as weak as they were, as Paulie was talking earlier, I'm like, I'm going to just pick up a little bit of dollar Mexican peso, just a little bit, just to have some exposure. And it just ripped up like hot, this is since Paulie spoke, it's like, okay, well, I'll take it because I know we're so close to resistance. Anyway, just letting you guys know that. That's kind of where my head was at. It was more of, there's nothing wrong with booking profits either, right? Dollar yen, we already went over the dollar index. Okay. So dollar index, we are getting to, I mean, look at this move. If you're short dollars, I mean, dude, that's so far up your nose right now. I mean, if you're like position short, I'm talking like institutional wise. Now I'm not talking about day trading wise. I mean, yes, this thing has gone straight up, but we got further to go. I mean, this is the wedge, right? Wedge resistance comes in at 92.75. I mean, I'm going to keep the dollar index in range because we are really, I mean, if you think about like, I mean, I could have done that for all of these. Really, I guess I could have put them in range, but I don't know. We're going to put it in bullish until we get to 92.75. We get to 92.75, and then I'm going to flip it back to range. Okay. Support for the dollar, 91.80. All right, let's talk about, oh my God. One of my friends bought silver last night. I hope they got out this morning because, geez. All right, well, gold, we know 1800 is big resistance. And while we're below 1800, and by the way, 1800 was a big deal because I thought 1800 was going to hold. If you guys recall from 2 days ago, I'm like, okay, if we break through here, we're going to challenge that channel again. It's previous support over here. That's why I had this blue line. I'm like, yeah, I don't think we're going to get past there. If we break through the 200-day moving average. Obviously, the FOMC hit. We did. sliced right through 1800 at the 618. But unless we get back above 1800, the risk is that we're back down below 1700. So 1800, that's key now. We're bearish, and our target, next target here is 1755. We break through that, 1728. So 1728, 1755. Silver, very similar situation, although silver is holding up better. This is the 200-day moving average. So if we break through 2560, while we're below 27, I think you got to stay tactically bearish, but I think it's more of a range. Did I say 2660? 2560, I'm sorry. 2560. I'm going to keep it in range. Bitcoin looks like poo on a stick. We're just holding this. Looks like a pennant, right? So I will write 42,500, and support is 30,000. This is, and we could actually probably write 41,000, something like this, and then be bearish. So support 4170. Oops, too many asterisks there. Okay. Why do I put all those asterisks? Because you guys know where support is. I don't have to spend a lot of time here. It's right there. Right there. Okay. We break through this 70s, and then I'm going to sing a completely different tune. Resistance right now, 4230. Then 4,300. Oops. I guess we could write 4270 first, right? 42. Anyway, okay, here we go. And it's bullish, but if we break through that 4170, everything flips. So I want to wish you guys a great weekend, and thank you guys for being part of the community. Gorkum said, I'm with you in the dollar mex, and since you said it's a Wyckoff pattern on the dollar mex, I'm now adding more. I agree, and I think we can just continue to play it to the long side, Gorkum, but what I'm going to do is I'm going to actually, let's go back to the Wyckoff. Then I'm going to let Steve take over. Steve, good morning.
Good morning.
I'm just going to pull this over really quick. Zoom in, pull that over, and pull this over. So going back to we're here. So let me grab the pen. So this is why you have to be careful here, Gorkum. Let me do where the hell is there? We can do it this way. Okay. So low volume sell off, right? Boop, 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 boop. Now that little pullback that we had this morning, maybe that's this, but I'm going to assume that we get a little bit, because the S&P is not breaking down, right? So I'm going to assume that we can make it back here Monday, Tuesday, right? Then that's what I'm thinking. That's what I think. Okay. All right. Hey, Steve, I'm going to let you take over because I need to take a break.
You couldn't have timed it more perfectly than this.
Why?
First half of the game just finished.
Oh, look at you. I forgot. All you Europeans not even watching this. You guys said F the market. You're done. All right. See you guys.
Don't forget that I'm not a day trader, right? So
yeah, I know. All right. See you guys. Hey, have a great weekend. Thanks, everybody.
Bye-bye, mate.
Thanks, Steve.
Okay, so we don't have Stelios today with us, so I can have somebody to joke with. Anybody wants to take his place? I can unmute you. You know, if you're willing to take some jokes, especially if you're bold or something. Anybody? Any takers? Okay. So, what's happening other than the Euro Cup progressing? There is quite a lot of movement. It is to be expected. If you remember, I was very, very clear that since just a few hours after the FOMC statement, I was more or less certain that this was the catalyst that would finally produce some counter-trend moves. And when I say counter-trend moves, I'm not talking about a few hour worth of counter-trend moves. The market was looking for some kind of an excuse to move the other direction, which it hadn't done basically for 15 months. And that was it. As I've said before, fundamentally, I think the FOMC statement is absolutely a non-event. It's still an amazingly dovish statement in comparison to what we have, meaning we have ridiculously worsening inflation data. And the reaction from the Fed is that, we're not going to be probably hiking in 2024. We might be hiking in 2023. None of that matters, really. First of all, they can't accurately predict a month ahead. Needless to say, if they're going to hike in 2023, in 2024, or whatever else. And even if they said that they would be hiking at the end of 2022, first of all, I remind you that supposedly the market is a discounting mechanism that discounts 6 to 9 months maximum forward, meaning that none of that should play any role. Second of all, it doesn't really matter if they're going to hike in 2023 because they're going to still be extremely behind the curve. We also see that inflation data are much worse in the US than they are in the rest of the developed world, meaning the DXY should be, if fundamentals only played a role, which they don't, and I've told you that multiple times, the DXY shouldn't have cared. Yesterday, actually, it should have sold off even further, if you ask me. But I was fully aware that the market is, and if you remember, I said that the previous day, the market keeps expecting more and more and more of the Fed, which of course the Fed cannot deliver forever. I mean, it's impossible to make every single statement more dovish than the previous one, right? It is just simply impossible, especially when you've reached these levels of dovishness. So just the fact that the statement was incrementally less dovish than the previous one was enough to steer the market in the other direction. And it's okay. I mean, we've seen that happen multiple times, and it's going to happen again in the future. Sometimes the market is just looking for an excuse to do what it wants to do. In this case, what it wanted to do is get rid of weak positions, work off overbought or oversold conditions, depends on what kind of instrument you're looking at. So it can then more freely move to the direction it wants to go. Now, the fact that we've seen the moves unfold in an impulsive manner told us since the very, very beginning that this corrective move, because I still consider this move to be, that it will be proved to be in the medium to long term, just corrective in nature. But it proves that this move has more legs to run before we can actually find some temporary equilibrium, and then we reverse to follow the longer term trends, because I do believe that the longer term trends will continue. In any case, let's go over several instruments. I'm not going to focus that much on the major ones because Blake did a great job covering them. I will tell you about the S&P, that the S&P has broken through the first ascending wedge, and that keeps alive the possibility we had talked about some time ago that this might be, if you remember, I talked about this with Gregor. Gregor had a different um, uh, wave counter as his main, but I told him that in my opinion this might be an expanded flat, meaning we might even see a lower low from that low before we continue higher. And as long as we see the dollar moving higher with the momentum it does, it is very, very likely. Now, an important level on our way lower is going to be this trend line support that you see over here, right? So we're not there yet. We're currently testing the 50 daily moving average. Admittedly, if we go to the 4-hour chart, admittedly, the corrective move so far has been playing out in a, within a channel, which, is, textbook corrective pullback. Now, let's see if we can see what we saw in the currency market, meaning the vast majority of the pairs breaking through these potentially corrective channels to produce some kind of an impulsive move, which would show that the corrective move lower has way more to run. In this case, I would be looking next towards the 61.8 of this. Sorry. Yeah, this move higher. But in this case, let's just take the whole move higher. So towards 4,000, right? Next. Now, currencies keep pushing in a very volatile manner for our recent standards, because I'm old enough to remember the days that moves like the ones we see yesterday and today were more or less, standard. I remember there were very long periods of time that we had several of the major currency pairs, especially the yen ones, that had 200, 300 pip ranges on a daily basis easily. Now, of course, all this central bank manipulation has led to a dramatic reduction in volatility. But it's nice to see windows of opportunity like the ones we've been seeing recently. I mean, since the end of last week, that finally things are moving properly. Now, Aussie has broken through the trend line support of the potential symmetrical triangle. So that goes out of the window. That opens the door for a move lower towards 73.5. So more room to move there. I said since, weeks ago that Kiwi was anyhow looking like it wanted to produce one more move lower. And speaking of which, let's fib extend the first leg lower and see where an implied target would be for this move. 68 cents. Equality of first leg to the second leg lower, right? 68 cents. So yeah, lower for Aussie, lower for Kiwi, higher for USD CAD, higher for USD NOK, lower for the metals. You get it. Let me find USD NOK. Here it is. Slicing through levels. Another trend line resistance we're taking out today, and currently testing the 200 daily moving average. My assumption is that we're going to break through that as well. Yeah, we're going to see pullbacks on the way, right? So now let's delete all that. This is how price action should unfold more or less until we find the high. Okay, use the SEC even more strongly, pushing higher, right? I think it's a matter of time to retest the previous high there at 875, whatever that is, 874, whatever it is. And clearly, any pullback back towards 850 should be bought. USD CAD has now completed the rectangle's implied target, as it has now almost reached the previous channel's trend line resistance we might see an initial reaction from there, like a little bit of a pullback before we can resume higher. But as I said before and at the very beginning, due to the impulsive initial nature of this corrective move, I do consider that this move has more to run. So you shouldn't try to fade it like, imminently. You can actually make money being counter trend, because I'm assuming this move is going to continue, perhaps even for weeks, right, before it can run its course and we can resume normally to the direction the fundamentals would also point towards. The other day, somebody asked about 126. I'll insist that I consider an even better target 127, 127.50 in the case of USD CAD. And yes, trust me, it can extend that much. Keep that in context, right? Just keep the big picture in context. Even if we retrace back to 127.50, even assuming that, that is still going to be okay. Let's see. There it is. So that is going to be a little bit more than 23.6% fib of the move lower. It's going to be roughly 30% retracement of the whole move lower. So nothing to write home about, right? Notice also that the vast majority of these moves, of course, USD CAD is like, the leader. We talked about that even before we broke out, that the Canadian dollar looked weaker than the rest of them. So USD CAD would probably be the best way to play USD longs among all currency pairs, and so far from the major ones, and so far this proves to be the case. Look at how the daily RSI went from being oversold on the daily chart to being overbought. Now, the fact that we're hitting overbought conditions on the daily RSI, look at when the last time we were there was March of 2020, right? Now, this is not an indication that you should be shorting. It is actually the exact opposite. Yes, we might be in the short term and short term charts, we are very overbought in the very short term. Like if you look at 1 hour charts, 4 hour charts, 2 hour charts, so on and so forth. But this says that you shouldn't be fading this move. You should be looking to join it if you're a shorter term trader, right? So keep that in mind. You know how bearish I am the dollar, but I'm not bearish the dollar currently, right? Not in the short term. As I said, you need to give time to this move to run its course. And I think it's too early to believe that we're even close to doing that. Here's the DXY approaching the 23.6% fib from this move lower. So, we still haven't retraced almost anything. Admittedly, the percentage we've retraced in just 2.5 days, the last 2.5 days, is considerable. And yeah, I don't expect that the move higher in the dollar and the equivalent dollar pairs is going to, maintain this type of a momentum for many, many days. It's almost unlikely, but still, I believe, we have more to go. Now, next upside target for the DXY would naturally be the previous high there at 93.43. I think we're going to make it there rather easily. Now, are we going to go in a straight line? Probably not. We might see some, little bit of a pullback, right? And then something like this. So keep that in mind. Having to do with metals and the commodity complex, I would assume we saw an attempt of a rebound earlier today. So earlier today, we were attempting to do this, right? Now, was this enough of a rebound and we've already failed intraday? Yeah, it might be. I mean, it's not impossible, right? That this was it. Although there is still a decent possibility that we're going to see a little bit more of a rebound before we continue lower. Now, yes, I do believe gold and silver, after what we've seen, and I said it, since the very beginning of this move, have more to run to the downside. I don't believe you should be looking for them to change course in the medium to long term. I think that's going to be a grave mistake, very, very big mistake. But yeah, in the short term, they can actually pull back even further. Silver has a decent room to run to the downside, remaining within the context of the bigger symmetrical triangle. We can even go all the way down, even just below $23, and still be in a bullish long-term consolidation, right? You can see it here. In the case of gold, we can even produce a lower low from the 1675 and still be in a bigger bullish consolidation. Don't forget, always zoom out to know where you are at. And where you're at is that we've had a massive, massive bullish move from the summer of 2018 to the summer of 2020. So a 2-year bull move, which took us from 1160 all the way up to 2100 almost, right? And now we've been correcting lower, lower actually, in a much slower manner, right? For almost a year. And within that year, we haven't even retraced a fraction of that move, right? So we are in some kind of a complex correction. It was kind of devious the way we broke out from this triangle, and we're now, from this channel, and now we are back within the channel. But corrective moves very frequently unfold in complex manners, and we know that we've seen that before, right? But that's why we have technical analysis. I mean, I was following this red channel. The moment we sliced through it, I knew that the bullish case scenario for this consolidation was out of the window. It was over. Now, at some point, as I said, we're going to have soon some kind of a rebound higher from here, which should be sold. Probably, if you're looking to trade it shorter term, you should probably sell it. And we might then see a continuation lower towards below 1700. I wouldn't even be surprised if we made it all the way down to 1600, right? All these moves are going to be amazing, amazing buying opportunities for the medium to long term. Platinum almost at the 1040 level. I was looking for that level to be tagged for a long period of time as a potential downside target. If we break through that, we're then aiming towards 1000. I also believe the pullback in platinum is corrective. For the time being, we're holding this descending channel. My assumption is that we won't. And here is palladium, which has now invalidated the bull flag pattern by having this massive move yesterday that actually managed to even bridge through it and close on a daily basis through it. Now, this opens up a lot more bearish case scenarios, as we were discussing yesterday with Gregor before the uptrend can resume. So keep that in mind. Next downside target, if we slice through 2,500, because we're currently at a support level, 2,500 is a support level. Now we break through that, and the next downside area of support is at 2240. Keep that in mind. And you need to be patient because there should be more downside after seeing this move. I mean, more patient if you want to buy it. If you want to sell it, you can just sell at any rebound. I would guess toward 2600 and look for lower levels. Now we also have pressure in the complex of the crypto, of the vast majority of the cryptocurrencies. Now, admittedly, 2.5% lower for Bitcoin is not that dramatic, but considering that we've anyhow said that we're probably trading within some kind of a bearish consolidation, it's something to keep in mind. So Bitcoin is still consolidating in what is probably bearish consolidation. Ethereum is weaker than Bitcoin, right? You can see it here now. I don't know if we're breaking down at the moment because this trend line support is a little bit arbitrary because it doesn't really pass from more than 2 points. I mean, you can select that second point to be that lower wick over there, but there are other alternatives. So I'm not going to say that it's breaking down, but I'm going to say that it's definitely closer to breaking down and beginning another bearish leg, which I do think we're going to see in all those cryptocurrencies. Copper also breaking through the channel, which invalidates the bull, the bull flag scenario here as well. Finally, opening up the door for a deeper correction, which is very much needed. Don't forget, zoom out, look at the non-stop rally that we've had since March of 2020. And next downside target is at 385. Of course, nothing moves in a straight line. We're going to see small rebounds. For example, if we rebound from here anywhere close to 435 to 440, that move should be sold. Something like this, right? For the next leg lower, which should at least take us to the aforementioned support level. Wouldn't be surprised if it leads even lower than that, right? But one level at a time. One level at a time. Somebody mentioned the Euro Kiwi, I think, before, and I wanted to talk about these cross rates. I'm of the opinion that neither of those cross rates is breaking out, right? Not for the time being. Here is Euro Aussie. Here is Euro Kiwi. You'll see that they have something in common. Here is Pound Aussie. Here is Pound Kiwi. What's common, at least for the time being, is that none of them look like they're moving to the upside in an impulsive manner. I mean, compare the move you've seen in the dollar pairs with what's happening here. Bottom line, what I'm saying is that I think we're still within the confines of a corrective move higher in all of them. And that would also point to a corrective move lower in risk assets rather than an impulsive move lower in risk assets, because we know how nicely inversely correlated these crosses are to risk assets like the S&P, the DAX, so on and so forth. So I don't think, you want to chase opportunities in the FX world. I think there are so many things moving in a very nice, impulsive manner at the moment. Your choice should not be in these crosses to be long, because I do believe that they might find a high much, much sooner than the dollar is going to find a high. Keep that in mind. Or anyhow, they might underperform in any case. Now, you see we end up seeing like the S&P starting to dump lower in an impulsive manner, then we're going to see those break higher decisively. But until you see that happening, I'm not expecting any fireworks here, not based on the price action I've been seeing so far. Next question. What do you think about Euro, Yen, CAD, Yen, Kiwi Yen? Listen, this is one of the first things I showed the day after the FOMC. And I said that, listen, I think things are really moving in the Yen complex. Euro Yen has now broken through this blue trend line support and is currently testing this trend line support. You can see, how important it is. It dates back in at the lows we found in May of 2020. We break through that as well. Next downside target is at 127.50, and I think it's extremely likely that that's going to happen. I also showed the Aussie Yen and the Kiwi Yen, saying that in my opinion, they're very good candidates for breakdowns. Here is the Aussie yen confirming that belief. It has now broken down and back within the previous channel. Here's the Kiwi yen that has broken through the ascending wedge. I talked about it while we were attempting to break down, and I said that, this happens, which is very likely. Look for a full retracement of this ascending wedge, meaning for a move back towards 73.70. So in my opinion, there's more to go in both cases. We might be even just entering the phase of accelerating, right? I also said that the pound yen is holding up better than the rest, but of course also got a very nice technical rejection from this channel, right? So we're now back testing this horizontal support area at 152.50. Extremely likely that we're going to break through that. Keep in mind, we have, especially in the case of pound yen, we have a lot of room to move to the downside without even breaking the overall uptrend, right? We can move all the way down to 145.80, whatever it is, and still be within the context of an uptrend. So keep that in mind. You also asked about CAD yen. Here it is. CAD yen also failed above there. Now about to re-enter the long-term channel it was trading within. So keep that in mind. I think it's very likely it's going to happen. Once that happens, look for a move back towards 87 to begin with. Yes, I did cover platinum. My pleasure. Let me see. Okay, I think I covered the things I had to talk about. Any questions or requests? The IWM, yeah. Here it is. IWM failed without creating a higher high. Right, keep that in mind. So probably we need to rework the triangle. Still not bearish, as none of the rest of the indices looks bearish for the time being. Yes, we are seeing a move lower. Have we broken the uptrend? Have we invalidated the uptrend? No, not for the time being. For the time being, the move lower unfolds in a very orderly manner. So keep that in mind, right? In the case of the IWM specifically, I think there is no technical event to talk about as long as we trade above like 213, 214, something like that. Okay. Anything else before we call it a day in the weekend? VIX, by the way, quite a nice move higher. Just watch it's retesting the 20 support resistance area. So keep that in mind, right? Quite an important support resistance area. We need to extend and slice through 20 to see another leg higher, in which case it would be a leg towards 25, and in which case we might see an acceleration lower in indices. And until or unless this happens, I doubt you're going to see any real fireworks. SMH, nothing happening here. Holding up quite nicely in comparison, right? Holding up quite nicely, very nicely. NVIDIA, which is NVIDIA. NVIDIA couldn't care less. For those of you that follow and know, I can tell you in advance, and we had this conversation some time ago when we plotted this, and I said that it should be breaking higher, as it did. There is an amazing shortage of graphics cards. I mean, the market conditions, I've been in technology since middle of the 80s, literally, since the middle of the 80s, with the exception of a very, very, very short-lived period that we had, like one of the, when I was rather young, when we had one of the biggest RAM factories, memory factories burned down, one of the biggest suppliers burned down, that created a supply shortage in RAM chips, which increased the RAM price for a few months. And another kind of incident that had to do with hard disk drives, also long time ago. I never remember seeing anything like this. It's been now more than a full year that people are desperately looking for graphic cards and they can't find any. The shortage is so bad and so big that there is a whole new profession of scalping. And yes, it is equivalent to the scalping we have in trading, that's based on graphics card, meaning there are people that have built like algorithms and whatever to actually buy the limited supply of graphics cards from like online shops and whatever, whenever they come online, so they can actually absorb all the existing supply and sell them back into the market via facilities like eBay, like brand new, already bought at twice the price. So graphic cards that their suggested selling price and the selling price from the producers are like $1,000 are being sold in the market by scalpers for $2,500. And we're nowhere near solving this shortage. So as long as this shortage is a thing, literally Nvidia can and is taking advantage of it fully. They've kept increasing their prices simply because the thinking is, why should we let the scalpers make money from our products, from our brand new products, and shouldn't we take advantage of that and make some extra money ourselves, right? So they've been increasing prices. They've been creating new graphics cards that are completely obsolete, meaning in essence they don't cover any real market need. They're creating new models that are fractionally different from existing models, just to reprice them, and they're going to keep making tons and tons of money. So as long as that's the case, I don't see any reason why Nvidia is going to deflate in price, right? Keep that in mind. Now I know I gave you a lot of background that probably you didn't care about, but it is what it is. TAN. Yeah, TAN might have broken out. I don't like the momentum higher yet, I can tell you that much. But on the other hand, it has done nothing wrong after finding a low over there. Right. Now, it's a different story if I would be buying it instead of something else. Probably there are better charts out there, charts that give you a lot more confidence that you found a low. But there is a good chance it has found a low. Right. So keep that in mind. We might see something like this. But there's always a chance that it's a more complex correction. Who knows? It might be something like this, right? And we might need to have another leg lower before higher. So, in essence, what's missing, and I said it before, what's missing for me to feel even more confident that we found a low over here is the impulsive nature of the move higher I would expect once we found a low, right? And that's missing for the time being. Oh yeah, so keep that in mind. FSLR. Still within some kind of a bullish corrective move, right? Hasn't broken out yet, so don't jump the gun. TSM. Last time we checked it, we were there. I said that it should have at least one more leg lower. We did see another leg lower. And now there is a chance we formed a double bottom. Let's see. And at an interesting area as well. Yeah, we might have actually, we did all that. We might have found a double bottom. You know, how do we confirm? We need a move above that resistance. And that should trigger a double bottom. Which would point to new highs. Okay. Until that happens, respect this range. So we might spend, there is a chance that we can spend more time in here, right? Keep that in mind. So would I be doing something with it here, right now? Absolutely not. Absolutely not. Not sure if I should type it in here or in chat. Both work fine, Catherine. Would I take a look at FTSE? Of course. More than happy to do so. Let's look at UK 100. That is, it's the same thing, but in a CFD, right? It's the same exact thing. Nice failure after posting a new high over there and now testing support. Be careful. Be careful here. We break through this support area. There's more downside to go in the FTSE 100, right? So let's see how we close the day. But yeah, there is a chance if we bridge through that, there is a chance we have a decent more downside coming. I would say a move back towards 6,500 roughly, this previous high can easily be in the cards if that's the case. Quite a strong move lower today. It rolled over slowly, but it seems to be accelerating today. Moderna, nothing has changed with Moderna, mate, since yesterday, trust me. DAX, there it is. DAX as well. Failed after producing new lows, look lower. Look lower for the time being, right? I'm not assuming that we found an all-time high or whatever, but I think that we're finally going to see a more proper corrective move. I would guess we should at least retest 14,800 in the case of the DAX. We might even unfold even further, right? I'm just giving you like my first target in this case. Anyhow, let's have a look at Moderna. Although, as I told you, having a look at these on a daily basis, unless it's like a massive move, doesn't make much of a difference. Yeah, here's Moderna. Nothing has really changed here. We'll probably need to unfold this corrective move even further, but for the time being, this pullback looks corrective after a parabolic move higher. So I would say that at some point this is going to be over and we're going to continue higher. KO. Is this the one? Coca-Cola Company? Laura? Okay, so you want to have a look at Coca-Cola. I can tell you what's the good thing and what's the bad thing about Coca-Cola Company, technically speaking, right? Now, the bad thing about Coca-Cola Company, technically speaking, is that this is a very impulsive move lower. I mean, you don't need to be an expert to see the impulsive nature of this move lower, right? Look at how sharp it has been, how violent, how fast we retraced, like a huge amount of the gains we had. I mean, we retraced within a very short period of time back to prices we hadn't seen since 2013. So people that were long Coca-Cola since 2013 and held it to 60 found themselves back out of the money, like within, what was it, a period of 1 month following the COVID sell-off. Now, the problem here is that the recovery is not impulsive. Right? Look how long it has taken us to not even retrace the whole move lower. So this would scare the bejesus out of me. We can keep on moving higher as long as we respect this trend line support. But if for any reason we break through this trend line support, I would be very, very, very scared of holding this stock. And I'm telling you that despite going against my fundamental bias. Because my fundamental bias is that after all this froth that we've seen, value stocks are a much better bet than growth or otherwise called momentum stocks, right? But I have to tell you that I don't like this chart, longer term speaking, right? Of course, it can still keep moving higher as long as we respect this trend line support. You have it from 49. No, you shouldn't get out if you have it from 49, because you're in the money and we're still in an uptrend, right? I would, though, what I would do if I was you, I would definitely put a limit order to get out of my position. And I'm not giving you advice. I'm just telling you what I would do. That doesn't mean you have to do it. That would be slightly within my profit, right? I wouldn't want to see a lower low from this one, for example, 50, right? I wouldn't want to see the stock move below 50. So I would protect a little bit of my profit and let it ride. You never know. We might find support once again here and keep on moving higher. We might just pull back, retest the channel, the trend line support and move higher once again. In general, my advice for everybody is never give up your profitable positions easily, because in essence, what you're doing inadvertently, and you don't even understand it the moment you do it, is that you skew your overall risk reward ratio. Because it's human psychology and human mentality is the following: when we enter a position and we tell ourselves that we have a specific stop loss, right? So let's assume that you are very bearish Coca-Cola company, right? And you sell here, and logically speaking, you would place your stop above the highs, right there. Let's assume you're very bearish and you're shorted here. Where would you put your stop loss? Let's say over there, right? Now, 99% of traders, if Coca-Cola started moving higher tomorrow, you would not take your losses earlier than your stop loss. You wouldn't. You would keep praying that you're going to be right until the very, very moment that the market would hit your order to close your position. Unfortunately, there are also many, many traders that would start rationalizing the losses and would end up saying something like, something, I'm still very bearish Coca-Cola company, and yeah, it's about to hit my stop loss, but perhaps I should give it more space. I should move my stop loss over there, right, above this trend line resistance, to give it more space to let the market prove that I'm right. So there are unfortunately a lot of traders that would even change their plans and worsen the risk reward ratio just because they don't want to take losses early, right? Now, despite having many of the traders skewing their risk reward, worsening the risk reward when things don't work out, there are very few that would do the opposite. So when you take profits earlier just to protect some of your gains, in combination with the fact that, as I said, almost nobody takes losses earlier, so losses don't become even more. Effectively, what you're doing is that you, from your nominal risk reward ratio, you end up producing a very skewed risk reward ratio. And I'm totally against that. Imagine if every single time I held USD NOK, my average position in USD NOK was there, right? And I held it until like 2 days ago. Imagine every single time we had a little bit of a rebound, I got scared and I closed my position, how much of the profits I would give back, right? But I know I wouldn't do that if it was to change my my stop order, right? Natural gas and AMC. Oh my God, AMC, these stocks. I can tell you one thing for sure. I can make no predictions about what AMC is going to be doing now, but I can make a prediction of what AMC is going to eventually do. This. In my opinion, there's going to be a time again that you're going to be lucky to see AMC at $10. So let me start by my long-term thesis about AMC. AMC is not going to make any money. AMC took advantage of the hype and all this craziness to make itself more viable in the short term and push the problems down further back in time. But the fact that their business model is not probably going to work, same thing with GameStop, hasn't changed. So speaking about shorter term, look, we've broken out of this, but the way we've been rebounding is not impulsive. So I wouldn't be surprised to see something like this unfold in AMC, right? Eventually it's going back towards zero, not necessarily to zero, but towards zero. So be fully cognizant of that. Yeah, for day trade, I would be very careful here with the rest of the market rolling over. Very careful. It seems a little bit fatigued. And look at the amazing RSI divergence, right? So I have to tell you that I don't like the price action for the time being for being long. I think there is another sell-off coming here in AMC. Last but not least, natural gas. Nothing here for the time being. Still holding above this broken triangle, right? And keep in mind that crude oil is also holding up very, very nicely in comparison to what everything else is doing that's dollar denominated, right? So keep that in mind. Crude, natural gas holding up very well. Okay, guys, gals, I wish you all a very nice weekend, and I'll see you back on Monday. Enjoy.